Topic 1. Oil jumped about 10% as what's described as the largest supply disruption worsened. The Iran war is driving oil prices higher. Goldman now sees Brent above $100, oil topping on $100 a barrel. International oil prices surged roughly 9 to 10% in a single day, pushing Brent past $100 a barrel and lifting WTI into the mid-90s. The IEA labeled the event the largest supply disruption in the history of the global oil market, citing Iran-related attacks and an effective blockade of the Strait of Hormuz that has choked oil shipments. The Strait of Hormuz carries about 20% of global oil and gas flows, so a sustained closure risks a severe global supply shortfall. IEA members agreed to release 400 million barrels from reserves, and the U.S. announced it would make 172 million barrels of its strategic petroleum reserve available, but those measures take time and did not immediately calm markets. Major banks like Goldman now project Brent averages above $100 in the short term. Goldman March average above $100, easing possible in April, and warn that longer disruptions could drive prices even higher. The shock rattled equity markets, pushed fuel and jet fuel prices up, and raised concerns about consumer prices and airline fares. Topic 2. U.S. naval escorts through the Strait of Hormuz. Besant proposing an international coalition to escort tankers through the strategic Strait of Hormuz. Scott Bessent told Sky News that as soon as it is militarily feasible, the U.S. Navy and, if needed, a multinational coalition will begin escorting tankers. He said escort operations were pre-planned after scenario analysis. Defense Chief Pete Hegseth downplayed panic, saying the U.S. has already responded and there is no need to be overly worried, but he gave no operational timeline or detailed plan. Energy Chief Chris Wright said on CNBC the Navy is not ready right now to escort tankers, a comment that contradicted Bessent's timing and was partly retracted on social media. Analysts note physical and capacity constraints, Iranian attacks and reported mines, U.S. asset prioritization, and limited government-backed insurance programs that would complicate sustained escort operations. Iran frames the blockade as leverage and has been tied to recent merchant ship attacks and mine reports, while U.S. forces have struck some Iranian small boat or mine-related elements. International reaction is mixed. The G7 talks about restoring freedom of navigation, but many European states are cautious about joining high-risk U.S.-led military escorts. Bottom line, Bessent pledged immediate naval or multinational escorts once militarily possible, but actual start dates, scale, and allied participation remain uncertain because of operational limits and political hesitancy. Topic 3. Treasury yields and GDP revisions weigh on sentiment. Hopes for Fed rate cuts are fading, and traders now push a Fed cut further out. Mortgage rates climbed to 6.11%. U.S. Treasury yields showed mixed moves. The 10-year held around 4.28%, the 2-year fell to about 3.73% as short-rate expectations eased, and the 30-year sat near 4.91%. Mortgage and corporate rates tend to follow longer-term yields. Q4 real GDP was sharply revised down to a 0.7% annualized pace from the prior 1.4%, signaling slower growth and dampening investor sentiment. Core PCE, the Fed's preferred inflation measure, remains elevated at a 3.1% annualized rate for January, 0.4% month-over-month, keeping inflation risks above the Fed's 2% target. The Fed is widely seen as likely to hold policy rates in the 3.50 to 3.75% range at the next meeting, and markets are pushing expected rate cuts further into the year. Many traders now price a single cut in September or December, with some pushing cuts into 2027. Higher inflation expectations and geopolitical energy shocks have lifted borrowing costs. Freddie Mac's survey showed the 30-year fixed mortgage average at 6.11% for the week of March 12th. The combination of slowing growth and persistent inflation means policy easing is being delayed, while raw